morning, everybody. 8:10 a.m., June 13th. Of course, I think this is just becoming every day that I say this market's nuts, but it is. With the Israeli strikes on Iran, or Iran, however you want to say it, dropped down significantly to big levels, both the NASDAQ and the ES, and now we're back to basically the support level. And we're back at the 50% retracement of this move. So 50% of this move has been taken back already. Very interesting what we're going to do here. ES, you're back at the basically a big support level, 59.90. NASDAQ, you're not there, as you're not back at that point yet. Now, of course, the S&P 500 is not going to go as down as much because you have some other sectors in it. They're going to push it, like energy's going out the roof right now. That doesn't really move markets, but it's part of the S&P. And other stocks as well aren't going to be down as much, which will make the S&P relatively stronger than just the tech-heavy Nasdaq. Okay, but the Nasdaq's almost at the midpoint of this move, not there, and the ES is above the midpoint. Okay, now today we have Michigan consumer sentiment at 10 a.m. Then Trump is talking at 11 a.m. I'm not gonna lie, Trump. I'm I'm not the biggest fan. I'm not the biggest hater, but I am not a fan of these markets. Just being honest. I've been in many winning trades that have either broke even or took a small loss or a loss when I was up, just because of the headline risk. And like I said, there's nothing to be against somebody, but it's in the Trump market that his words move markets. And Joe Biden, right? Joe Biden, it's not about him. It's just about the markets with him. He didn't speak or tweet or do anything that was caused the markets really to move. Data did, but not his speaking. So don't get me wrong. Sometimes his words help a move. And yesterday was just horrendous. I was in a long yesterday, working out, up over one and a quarter, 1.5 R, and I was like, all right, this should move higher, and then it barcoded. And then I tightened my stop up because he was talking. And I'm like, you know what? I'm going to put my stop here. If it gets taken out, it gets taken out, it gets taken out. So it was a small green trade. And then the market just literally just didn't do anything. And then the strike happens. Okay. So, that being said, should be a crazy market today. So welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile to find structure in the markets along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge, and that's what I share with you. All right, and you're going to see how these levels every day react. They get reactions. All right, they get reactions. Okay, and we'll go over that in a little bit. Now, hopefully, if you're new, subscribe, set an alert. Okay, but notice I've been getting a little more views, which I appreciate. So join me every morning. Have a cup of coffee or tea or water. Put me on in the car, whatever. You get the lowdown in the markets. Okay, break it down. Market news, economic calendar, and we go into a lot of other stuff. Okay, we go into a lot of other stuff later on. But the beginning of the stream, anybody who wants to know about stock market, why is it moving, should sign up, listen, and join. Okay. I'm going to not waste any more time. We're going to get right into the futures watch list here. Okay, here's the futures watch list. And look at your VIX here. Your VIX is up 11.15%. We're at a 20 VIX. So we're going to get some nice volatility back today. Okay, look at crude. Because of that strike, any kind of geopolitical stuff that happens like that, all right, it usually launches crude. Now crude's back up to 73.43 dollars a barrel. It's up $5.41, 8%. 8% it's up. Okay. Now what that's going to do, remember I was talking about this yesterday, whenever energy goes up like that, it's generally not a good thing for markets. Okay, now think about it. If the oil gets more expensive, right, CPI is going to get hit. So we'll just see. I don't know how long it could stay up here. And usually these wars have a instant reaction, but then eventually the market becomes numb to them. So is this priced in already? These strikes could be. All right, sold off. Let's just see. I'm not sure. Of course, gold's getting some love. Geopolitical concerns. The dollar really hit a low. So now you have the dollar moving higher with gold. Silver's up 0.25. 30-year bonds being bought slightly. 10-year yield down slightly. ES down almost a percent. The Dow's down almost a percent. Nasdaq's down 1.21. Remember I said that's relatively weaker. Russell's down 1.34. Bitcoin's down 1.42. Ethereum's down 5.2%. Ethereum's down 5.21%. Okay, moving on to the Max 7 Plus here. Your bright spot is Apple. It's flat. Okay, Apple has a huge level of 200. It's a big, big gamma level. So it's not too far away from that. All right, it's just a monster level. Okay. Then we have Eli Lilly, which is healthcare, which shouldn't get affected that much by this news, right? And then we have a bunch of one percenters. We'll just go over the one percenters. Boeing's still going down because of that flight. Nvidia's down 1.32, Meta down 1.35, AMD down 1.4, Tesla's down 1.42, Amazon down 1.45, GE down 1.66, Google's down 1.74, and Broadcom's down 1.73. So semis are getting hit pretty hard today. Communications. Okay. Top sectors. Flash it here. You can just see Exxon and Chevron at the top of that list. Bottom of the list is Uber, Qualcomm, and Visa. Okay. Now remember, this war has nothing to do with really anything with the stocks. It's just a reaction. It doesn't hurt anything. It's going to be in the past eventually. So just keep that in mind. Now we go into the guts of the market here. Obviously, energy's up 3%. That's monster. Okay. Of course, any kind of geopolitical. And I just read that oil spiked the highest from one thing move in 3 years. So, and the 1% sector's down. Technology, that's your heaviest weighted sector in the market. Financials down 1.16. Discretionary, your Tesla, your Home Depot, your Amazon down 1.34. And semiconductors, your risk on, risk off indicator, which is risk off, down 1.76. Okay? And like I said, this doesn't fundamentally really hit any companies. It's just a reaction. So, like I said, is it priced in? It could be. Right? We know they're attacking Iran right now, Iran. Okay, we know that is happening. It just sold off, and we just took back more than 50% of the move. So just keep that in mind. Okay. Okay. Then we're going to go to market internals recap here. Let's just do that. And just see how the market was looking yesterday. So yesterday really was never weak. Okay. Really was never weak. And tech was strong. Look at all the top four sectors are all green. Communications was your piano on the back. Communications was the piano on the back on the market. And then you can just see we just stayed at this level and just barcode it. It couldn't get out of this level. Now, granted, where were we on the charts, right? Where were we on the charts? I'll just hit you up with this 30-minute. Okay. So this is the session from the prior day. This is yesterday, right? You were right at the midpoint of the prior day. Okay. So the Nasdaq was just caught dead in the middle of the day prior day session. Okay. and still inside the prior day session with the ES. Okay. So internals, like I said, were strong. It just couldn't move past that to break the highs really and continue. Just couldn't do it. All right. So very interesting here. That was like a very interesting day because it wasn't like chopping around. Even you can see, look at the spine in QQQ here. It's not like it was like not moving in decent range. Like it wasn't like these little candles, but it was just really not doing anything. It was like just stayed in the range. Okay. All right. Moving on to our economic calendar. Okay. And then we, like I said, we got a bunch of stuff on tap here. Today what we have is Michigan consumer sentiment at 10 a.m. Michigan consumer sentiment at 10 a.m. Okay. Now, if we go to the juice, we have Trump at National Security Council meeting at 11 a.m. Okay, at 11 a.m. Also, some news is Walmart and Amazon are contemplating issuing their own stablecoins. That's interesting. All right. So we already know about the bomb, the strikes. Okay. Let's talk about some other stuff. Meta poaches 28-year-old Scale AI CEO after taking multi-billion-dollar stake in startup. AMD unveils AI server on OpenAI, taps its newest chips to compete with Nvidia. Trump after feud, role of Musk's SpaceX and Golden Dome missile shield in question. Foxconn sends 97% of the India iPhone exports to U.S. as Apple tackles Trump's tariffs. Nvidia to exclude China from forecast amid U.S. chip export curbs. Okay. Adobe beat earnings, but they're down a little bit. Like I said, I'm not going to go too crazy into some of these. Let's see. All right. Let's look at the juice real quick. Like I said, there's nothing that I'm going to tell you unless you're just waking up and realizing that Israel attacked Iran. All right, let's just look at some of these here just to see if anything's jumping out. Tesla stock fell 1.2 of the electric vehicle manufacturer upgraded its Model S and Model X cars in U.S. and raised their prices to 5,000. All right. Apple stock rose 0.2, outperforming the wider market after data from Counterpoint Research showed iPhone sales rose to the top spot in China in May. Interesting. Adobe stock fell 3.3 after the software group disappointed when compared to rival Oracle, even as it raised its annual guidance after the reporting better than expected revenue. Then we know about Chevron and Exxon. Okay. All carriers, airlines dropped sharply as the surge in crude prices raised concerns about higher fuel costs. Defense companies, this is probably going to be no surprise, all gained on heightened geopolitical tensions. Credit card giants MasterCard and Visa both fell over 2%. On the Wall Street Journal reported that a number of major retailers have been exploring the use of stablecoins to get around the charges the credit companies levy. Wow, that's very interesting. Okay. One other thing I guess we could talk about real quick, just the breadth. Okay, the breadth has kind of improved lately. Overall breadth of the market. 63% of stocks are older 28 simple moving average in the S&P 500. 63%. We were down to 41, and then we were as high as 80. That's usually frothy time. All right, but the breadth has kind of improved a little bit. Okay, not crazy, but healthcare with Eli Lilly moving and United Health moving a little bit, improving overall breadth. We'll see what that means. Like I said, seasonality wise, what typically happens is we bottom in June. Let me see if I can grab. Give me 1 second. I'm gonna grab that my seasonality. Let me make sure I have that. Here we go. Yeah, I don't know if this is gonna show it the best of this seasonality, but here's seasonality of the last 10 years in the SPY, right? So purple is right here, what we're doing. Now I can update this. Give me a second here. Let me just update it for you. I have a script. So give me 1 second. I'm just going to run this script. It's going to take me 2 seconds. Just so I can give you guys the best current. All right, that's it. It's done already. All right. So I just ran the script. Okay. So the blue is the seasonality over the last 10 years. See how we kind of like generally bottom in June, right? Typically we bottom in June, rally up to July, and then tend to fall in a low in around September, October. So I don't know. You can see here, right? Here's what we're doing this year. We really had a strong May, right? May's generally not as strong. And now look, we're dipping in June. And usually you bounce, right? Have a rally in the summer to fall to Santa Claus, okay? Just wanted to show you guys that. All right. Now, let's just get right over to the daily charts. And not a lot to glean from this, but we're always going to go over it. Okay. Because yesterday, okay, it basically was, all right, here you got 2 days. You opened here, and you had support. It's kind of like a 2-day balance low, and the market bought it, right? And then we just went all the way up. We couldn't take out these highs, but we kind of went equivalent to those highs of the other day, right? So now where are we at? 598.72. 598.72. We are down here. We're down here, right at the 9 EMA daily. Right there. Okay, so you're below all these lows, but we recovered big time. Okay, we recovered big time. Okay, let's look at futures because you're going to see that recovery here. You're going to see a big wick. Look at that wick. Look at that. Move down. Look, you move down to where? To this support level here, around 59.28, and wicked right back up. And where are you at? The lows of these prior days. Okay, does this all of a sudden get taken back? I don't know, but that's a serious wick. Okay, so that tells me that the shorts that came in took profits, and now we're going to be back into this balance. Okay, Qs. So the Qs, we'll just look at this days here. Didn't get as high as the ES or the SPY. Okay, pushed up, right? You didn't go to the really like the prior days lows at all, but then you got bought, came up, sold off a little bit, closed right here in the middle of the prior day, like I just was showing you guys earlier. Okay, where are we at now? 527.70, 527.70. Relatively a lot weaker, right, than the SPY. Down here, 527.70 is right here, below the 9 EMA daily. Okay, and let's look at the futures, and you can see where the Nasdaq is. Still has a big wick and right, and we're right here. We're below all these lows, right? So, but that's just a big wick at the 20-day simple moving average, and we'll get into other levels when I do the hourly charts. Okay. All right. Let's move on. Let's move on to the bond market. Triple-headed monster here. I didn't mean to put that thumb up there. All right. So bond market's been falling, right? And look, it got caught by last week's lows. Now you got a doji today, underneath the 50-day moving average. So you're underneath a bunch of major moving averages, not the 200. But like I said, this is just doesn't know what it wants to do. 10-year yield. All right, dollar saw its lowest price since 2022. Now the dollar's getting bought up. So who really knows what that's going to happen? What's going to happen with that? Sorry. The VIX. Now we got a spike in the VIX. Look how much we went up. We went all the way to 100-day moving average, around 21.88. Now we're all the way back down to 20. Big gap up in the VIX. Okay, big gap up. So this market always has some headline risk, right? And now we're going to move on. Okay, now we're going to move on to the hourly charts. We'll quickly go over these just quickly, okay? It's pretty simple, TA, for the hourly charts. Okay, I'm just getting them set up for you guys. All right, let's look at the hourly charts together. And you're going to notice what I always preach about my levels, right? All right, let's look at it. So where did we go in this ES? Remember, the most traded price of this year is 59.15. And there's demand right here. That's where we went. That's where we bounced. No surprise. No surprise. That's a pretty hefty bounce. Okay. And also, this right here is your anchored VWAP from the U.S. China trade pause, I think it was. Yes, that was the pause. So look at that. That caught the market as well. Okay. Then you have the month-to-date anchor VWAP, which is right here. And that's kind of slowing it down, the market. And basically, this 59.91 is this major support level that was broken with this news of strikes from Israel to Iran. That's what caused this big sell-off, right? But now we're back inside this range. Look, we're inside that range now. This is called pricing in war. Are we going to just take all this back out? I don't know. But that's where we stand. Now, your most traded price of the week is at 60.13, is right here. Okay? But we're right at the bottom of this area here. That is some serious buying. That is serious profit taking. Okay? All right, moving on to the NASDAQ. Let's check out that. All right. Now you can see never touched the U.S. China trade deal anchor VWAP. Remember, 21435 is the most traded price of this year and of the rolling year. But it did, look, come right down to there. Okay. Now I did put an anchor VWAP from the start of this war. It's already underwater, so whoever sold that now is underwater. Okay. And here's your level of support in the NASDAQ right here. 21723 about. 21720, let's call it. Okay. This little box right here. You are not at that level yet, right? Like you are in the ES, right? Remember, the Nasdaq's relatively weaker. Relatively weaker. Okay. You're still below the month-to-date anchor VWAP. When it turns red, that means sellers are back in control of this month. Now in the ES, the market is above the month-to-date anchor VWAP. Okay, most traded price of the week, 21858. Okay, so very interesting today. What is going to happen? Very interesting, okay? Really have to lean on my market internals today to really gauge what is going to happen. Okay. Now, we're going to get into the market profile here. Let me just change my workspace. And you could really see here, I'm going to go to crude just to show you the parabolic move in crude, which is pretty nuts. Actually, maybe just go to a daily chart of it. Yeah, there we go. So this is crude. Sorry about that. Hold on, let me fix that. Look at that move in crude. That is a monster. Woo. Went all the way up to $77 a barrel. 77.60. So pretty big move, right? Now, what's important here is look at the ES. I want to show you some levels we hit in futures. Okay. Let me fix this chart so you guys can see. Okay. So futures, this big wick, you came right down to that support, right? The daily support. Almost hit the 200-day moving average, 20-day simple moving average, and now you're right at the 90 EMA daily, right? Let's look at the NASDAQ, and we'll just bring this down for you guys. Okay. And here I showed you earlier, hit the 20-day simple moving average, these two daily lows, and now you pushed up and you're right at the 90 EMA daily. Okay. So it's going to be very interesting. I think it's going to be probably a difficult open to look at. Okay, to really like figure out what is going on there. Okay, and now we're going to start with our ES. All right, let's look at this together. Okay, so interestingly enough, okay, let me go here to white. This is our market profile, volume profile here. All right, let's look at that profile. Now look, we have our excess to the bottom now in this large range. There's excess. We have value area. And then we have a little bit of excess to the top. Okay, not equal distribution, but price is here, right? We're inside this range. Single prints are the emotional selling part right there, showing me that it's emotional. That's not two-way price action, that's one-way. Here's your month-to-date anchored VWAP. Okay, the market continues to eat up these single prints. And we could wind right back into this range. And it's going to be like, wow, we just erased that. We erased it. Look, we're almost at yesterday's lows in gap fill. It's pretty nuts. Okay. Let's recap yesterday real quick with the barcode. All right, so yesterday opened, little test lower, and then drove up, and then just barcoded. And then, of course, we fell. Okay. So that is our yesterday's session, which meant nothing once this news came out. Okay. Now we got our overnight. So now we got a couple key levels here to talk about. Right. We have a confluence high here at 60.51 and 60.48. 60.51 is yesterday's highs. Okay. 60.48.25 is the overnight highs. So this becomes a key level with supply here. That's basically your scene of the crime for this is Israel strike on Iran or Iran. All right. Right here. Okay. Now we have our most traded price of the week, 60.13. Okay. With single prints here from the overnight. Okay. You can see the mid where it says mid 59.88. That's the 50% retracement of this move. We're above that in the ES. Right. So this becomes the gap fill. Your gap fill is 6,850 right in here, right in this box. So that lines up with 60.13. This could be resistance. Okay, I don't know. Then we have our balance lows that got broken at 59.91 level right here. And that's where we're at. Okay. Now, what does this encompass? Month to date anchored VWAP. What that means too is when the anchor view up to the month is kind of flat, that makes sense. And we're right there. That makes sense because now we're kind of equilibrium for the month of June. Okay? That makes sense what we're doing. Okay? So it's a small gap lower now. Small. All right? Now you do have demand here. And that encapsulates this most traded price of the overnight right there. Probably around 59.55. And then of course we have the monster level 59.13 59.15 I believe it is, or 59.20, around this area here. That's the most traded price of this year. That's what held the markets. Okay? All right. So this is going to be, like I said, not very easy. That's a big, big move. Okay? That's a big move. All right, let's get into scenarios here. This is just a big, it's just crazy. You get that low, and now you're back inside this range, and you're pushing higher. It's just crazy, right? Now, of course, you got long here, you're loving it, but now you're inside this range, right? And then I would be thinking, okay, we're in the bottom of this breakout to those downside level. I probably take some profits here, and then that's why I think it's going to get really weird. Okay, so let's get into. I'm going to start with the short side today because this area is really crucial here. You know what I'm going to do? Let's erase this, and I'm going to erase this. All right, and we're going to make a new box here just because I want to make it neater. All right, so gap fill is here. That lines up with our most traded price of the week, okay? Let me make a separate box here. Make it neater. This is our breakdown level and our month-to-date anchored VWAP. Okay. Go back here. Price is here, right? So if I want to be bearish, okay, I think I could probably look at something in here, and it's not going to be easy. Okay. So the first thing I would like to see is see if we can fill the gap, and it happens to be right at the most traded price of the week. Okay, see if we can fill that gap. If we can, I would expect to get some type of reaction, higher, lower highs, and then you're going to have to battle with this month-to-day anchored VWAP. If you take this out, okay, I don't know how far you go. You might stop at this demand, and that could be the move. If you take out this most traded price of the overnight, I do believe you test overnight lows, and we land at the 59.20 area. It's probably all I would be interested in. You don't want to get too deep into this range. Okay? If we start to go real deep, now this has to be quick. This can't like hang out here. Okay? Now we also could open up, fail to fill the gap, come through, and then also get weakness. Okay? It's very tricky. All right, I'm going to go with what I want to see for bullish. Okay? And this is tricky. Make no bones about it. It's tricky. Okay? We're 50-50 here. From the highs to the lows, we're at the midpoint. That makes it tricky. You're at a breakdown level. You're at the anchored VWAP for the month. It makes it tricky. Now look, the VPOC just moved here just now. So the most traded price of the overnight is right here around 59.95. So people are just don't know what to do here. That's why I'm saying it's going to be difficult. They don't know what to do. Shorts are like, ooh, I'm shorting this breakdown level. Longs are like, ooh, we're back in range. I'm telling you, it's going to be difficult. Okay? It's very difficult. So, what could happen here? Okay. Now, you could fill the gap, let's say, and maybe you get a pullback back to this most traded price of the overnight and that breakdown level. And let's say we just hold and we start doing higher lows. Well, you're going to at least come here. If you could take this out and hold it, we probably could test yesterday's highs. I don't know how much higher you get than that. I don't know. Okay. What gets tricky is this demand, this level, right? If we start to push down to this level, do I want to be long? Could it work? It has to be quick. I'm not a fan of it though. I'm probably only a fan, maybe, if we make it down here and we go to that monster level. But we're probably pretty weak if we get down there. We probably get a bounce, but not bounce all the way back up here. So this one becomes the one that I'd only probably be interested in. Now the internals would have to tell me, okay, we're not that weak. Okay. So this is very, very complex. Not gonna lie. I'm not super confident of what I'm stating. Okay. Now moving on to the Nasdaq. Let's see if structure is different. It probably will be. Okay, probably will be. Let me open this up. I'm loving these new charts that I fixed because now we really can see the Nasdaq. Before it was like so minuscule. All right. So let's look at this together. First thing we do is look at that profile. And look at this profile. Got access to the top, value, access to the bottom. Almost a perfect bell curve. Not quite. Pretty good. Okay, pretty good. Price is here. Now, just to notice, 217, that's your 50% retracement of this move. Price is below it. Price is below it. Okay? That right there shows you the difference between the ES and there. The ES is back into range. Nasdaq's battling this support level right here, that breakdown level. Okay, that lines up with the midpoint. That also lines up with your anchor view up for the month, which sellers are now in control of June in the Nasdaq. In the Nasdaq. Now you do have single prints here. That's your emotional selling from the strike, from Israel striking Iran. Okay. Now right here is last week's highs. Notice that lines up with overnight highs, and it has a supply zone. So this really, honestly, this level is a lot, some selling in there. Okay. But obviously it's more back at the top of the range, not at the top. Okay. So like I said, very tricky. Now look, we're starting to sell a little bit. Okay, we're starting to sell a little bit. Most traded price of the overnight, it's around 216. Around 216 right here. Okay, see, we're starting to get some weakness now. Like I said, very tricky. Very tricky. Now we do have a demand zone that caught in this big level here, down here. So it's very tricky, like I said. Now I'm going to break this out. I forgot to do that in the ES, and I apologize. Let's do this, break this out. Okay, that's your price action. And we're going to start here with the bear side. All right, so let's do it. All right, so you can see there's like a double top here, right at the 50% retracement, right here, right at the 50% retracement. Okay, so what I would like to see if I'm bearish. Now you can see this breakdown level. Oh, we got to put gap fill in there, 21816. Let me change my color here. So it's very different, right? The gap fill in the ES is not as high up in this balance area, but it is for the Nasdaq. Okay. So if we're going to talk about bearish, right, which the Nasdaq is more bearish, right? Double top here. So this becomes important. So if we come back up here, come into that breakdown level, right? Month to date anchor V ups right here. You could hit that, some higher lows, some lower highs, I'm sorry. You could really start to push down. Most trader prices the overnight, that's 216. Really push down and test these overnight lows. And this level's a monster, 21435. That's your most traded price of the rolling year, the most traded price of this year, the most traded price of the month. That is a monster. That's your bull bear line in the macro picture. You break that, that is not good at all. I'm not saying I'm calling for that. I think it makes this more difficult. Okay, that's one. Now, the differences in gap fill here. This goes deep into the range, so I think this is my only short that I would really be interested in. Yeah, now that I'm looking at it, because if we moved all the way up here and filled the gap all the way up here, you're back into range. I don't know if I like that too much, because for us to do that, the market would have to get some steam. Okay, so this is rare, but it's pretty much the only thing I like for right now. Right, market opens could be different. All right, as far as the bull side, let's do it. Okay, bull side, like I said, becomes a little tricky. This one particular. Okay. What I would need to see, even if you pull back to this most traded price over and you start to work yourself up into range, I would probably want to see a break and a close above this month to day anchor V up at 21750 and say you hold that support level that now is resistance, that could be resistance, right? Then I would say you probably have a clear shot cleaning these singles up to the 218, 21855. Okay, then you got supply here, which probably should cause some resistance here, and then see if you can tap yesterday's highs. Again, I just think this is so tricky. Okay. Now, we could drop like a rock, and this would need to be quick into this big level, and you probably would get some type of bounce up here. I think it would be muted. Okay. So this is very tricky. I know I've said that a ton. Okay. That's scenarios today. All right. Today's Friday. All right. So we have our plans. Right. I'm very tentative on them because I really need to see the data that the market gives me when the market opens. And I think it's, you know, going to be very tricky. Number one, price action tricky. Number two, Michigan consumer sentiment comes out at 10. That tends to move the market. Number three, 11 a.m. is Trump. I'm hoping I get a trade from 10:10 to before 11 because it's not fun to being a trade when Trump's actively talking because the market moves in every word typically. Okay. Now, hopefully you'll like that analysis I gave you, and please smash the like button. That'd be much appreciated. All right. And as always, come join me every morning. Have a cup of coffee, water, tea, whatever. Listen to me. Give you the market lowdown. Right. Give you the market lowdown. So just giving reminders, 10 a.m., Michigan consumer sentiment, Trump at 11. All right. Everybody, have a great weekend. All the fathers out there, happy Father's Day for this weekend. Okay. I will see everybody back on Monday. Okay. Now, if you want to come see my commentary, you can join my Discord, Fluence Trading. All right. Go to my YouTube homepage, click on the link, come join. Then you have access to me, ask me questions. Okay. If you don't come there, I'll see everybody on Monday morning. Okay. Stay green. No trade's a trade. And have a great weekend.